Warren Buffett is without a doubt one of the world-renowned investors of all time, and it's such a privilege to hear about tips and secrets from the man himself. But in this video, your life is about to change as we now delve into the beginner's guide to investing as imparted by Warren Buffett. Welcome to the Quantum Wealth, where the road to success begins. Before starting with the video, please like and subscribe to the channel and comment below your thoughts for today's video. Now here is the beginner's guide to investing by Warren Buffett. Let's begin. At number 1, grab every opportunity. Once you see an opportunity, grab it and take it. A big or small opportunity doesn't matter. You have to do it. As soon as something pops up, get it, appear for it, and work for it. Furthermore, if you get the upper hand just like when stock prices go down, grab that opportunity as quickly as you can and purchase it as it may not go down anytime again in the future. This advice by Buffett should be remembered whenever stocks are down, as this strategy is very advantageous for you. When times are good, he earns an enormous amount of money. As a result, he makes use of this money to invest more when stock market plunges. This method is utilized by Buffett since he has a great deal of money available. If you do not take any opportunity that is just right in front of you, you will never be able to see it again. You might regret that later in your life. Regret will not get you far in life. Seize every opportunity and enjoy every piece of it. Life gives us a lot of opportunities, and living a life where we risk is more satisfying than living a life in fear. We are only given a few chances, so take it and seize it. Next, buy stocks that are lower than a company's worth. Buying stocks at a relatively lower price than a company's intrinsic value is an approach that would get you going. All things considered, the stock market is inclined to instability. Even though stocks are unpredictable and unstable, a company's value does not. At the point when quality stocks are modest, wise and smart financial backers purchase them. A company's value will never be determined, as it depends on how well the company is doing or the name it already has built in the industry. Nonetheless, it could still be discovered by a company's encompassing perspective and fundamentals. Value is what investors are looking for, and these investors take significance on what the worth of a certain company is. Moving on to only sell when the company's fundamentals changed impressively. Try not to sell except when the company's fundamentals change impressively. Assuming you are into a company and the administration and the company haven't generally changed. According to Warren Buffett, its values have an enormous benefit. He believed in the technique of purchase and hold. New investors would most likely follow this technique. Usually what happens in the market is that good company normally overcome. As a result, stock prices will start to mirror the strength of the company. In contrast to that, when you have a favorite company that has a great foundation but isn't going well, it might just be another problem you could get into. Letting a company go that doesn't do you well will provide you with a much better outcome than staying with it for no reason at all. Next, invest with your head, not with your heart. Investing in facts and verified information is better than investing in emotion. Investors are just humans, and they get all mixed up with markets that do not do well in the long run. These people should not get miserable over unimportant things. When they are not pushed by their emotion, it then becomes a powerful tool, as they only concentrate on the marker and sets aside the background noise that comes from individuals that give no important information. Next, integrity is important in investing. When investing, it is important to have integrity. Well, it is indeed significant for anyone to have integrity. You will meet a lot of people in your life. There are those whom you meet who are dependable, yet they are lazy and ignorant. Be that as it may, you can also meet people who are hardworking and intelligent, but ultimately lack integrity. Overall, greatness is difficult to find. One thing that allows this thing to come through is integrity. When someone is honest and has strong moral principles, then the rest follows. Now we are on to invest on qualified companies. Purchasing stocks from qualified companies at a relatively equitable price is another thing to follow. The majority of investors oftentimes only focus on purchasing the most inexpensive companies. On the other hand, Warren Buffett firmly believes that buying great companies that have strong economics and competitive advantages will yield better results. The reason for this is that, although good companies might go on sale consistently, great companies hardly emerge as giveaways. Next, only invest in what you know. Only invest in companies you know. Knowing what's the best company in the market is essential. Warren Buffett never invested in technology stock. Do you know why? Due to the reason that tech companies do not have a concise and well thought out strategic plan. Buffett only sticks to what he knows and things that he can comprehend easily. With this, it is evident why he invests in Berkshire Hathaway. This company has a wide array of equities such as banking, insurance, utilities, and whatnot, which is perfect for the taste of Warren Buffett as these are just right on his plate. Well, no surprise he invested his money on this. The future is all in your hands. That wraps up today's video for the Beginner's Guide to Investing by Warren Buffett. We hope you find this video helpful, and if you like today's video, please like and subscribe to the channel. See you at the next one.